All right, let's talk about that little cash box in your office. You know the one? In this explainer, we're going to totally transform how you think about it. We're breaking down a really powerful accounting method that doesn't just stop financial leaks, it can actually save you real money on your taxes.
Okay, let me start with a question for you. Is your cash drawer kind of leaking money? Do you really know where every single dollar from your petty cash is going? For so many businesses, that little box is just a black hole where money for office supplies or a quick coffee run just vanishes.
So today, we're going to see exactly how to fix that. Here's our game plan. We'll start by looking at the petty cash problem, then introduce a structured solution called the Impress system. We'll walk through how it works in action, cover some best practices for managing your fund, and finally, get to the best part, the big payoff.
First up, let's really dig into the petty cash problem. We're talking about all the hidden costs that come from being just a little too casual with that cash.
Wow, okay, this slide really lays it all out, doesn't it? It is literally night and day. On the left, you've got the usual way of doing things. It's chaotic, it's risky, and believe me, it's costly. But on the right, that's our goal. A lockdown system that gives you control, documentation, and accuracy. The difference is huge.
And these risks, they are so real. When cash just bleeds out of the business, you're not just losing a few bucks here and there. Nope. You're losing valuable tax deductions, you're distorting your financial records, and if you're pulling cash from your daily sales, you're basically undermining your own revenue tracking. So, how do we get from that chaos to having some real control? Well, that brings us right to our solution, the Impress system. You know, the entire method is built on this one super simple but brilliant idea. You create a petty cash fund with a fixed, unchanging balance in your main accounting books, your general ledger. That fixed number becomes your anchor for control. And this is it. This is the core principle. If you remember one thing from this whole explainer, make it this equation. At any given moment, the physical cash left in the box, plus the total value of all your receipts, must equal the fund's original fixed balance. It just has to. If they don't add up, you know you've got a problem. And the real beauty of this system is just how simple it is. Seriously, it's easy to maintain, it has controls baked right in, it keeps petty cash totally separate from your main bank accounts, and in the end, it just simplifies your accounting. It is a win on every single front.
Okay, so let's get practical. How does this thing actually work day to day? It's really just a simple, repeating cycle.
Think of it like a four-step loop that just keeps going. First, you establish the fund with a set amount, let's say $300. Second, as you spend money, you collect a receipt for every single transaction, no exceptions. Third, when the cash gets low, you add up all your receipts, let's say they total $85, and you write a check for that exact amount, $85, to bring the cash back up to $300. And finally, and this part is key, you record that $85 check to the actual expense categories, like office supplies or mileage, not just petty cash. Okay, so we've got the process down. Now let's talk about the essential rules for managing your fund effectively and making sure this system doesn't break down. The voucher or the receipt is the absolute heart of this system. It is non-negotiable. I mean it. Every time cash leaves the box, a piece of paper must go in. It's your proof, your accounting support, your documentation, and it creates a standard process that everyone has to follow. The rule is simple. No receipt, no cash. Period. Sizing your fund correctly is also crucial. It really is a balancing act. If the fund is too big, you've just got idle cash sitting around that could be a temptation for theft. But if it's too small, you'll be constantly running out and writing replenishment checks, which is just inefficient. You want to find that sweet spot for your business's needs. So, after all that, you might be wondering, is this structure really worth the effort for what seems like small change? Absolutely. Let's get to the big payoff.
This single sentence right here, it's everything. Every undocumented dollar you spend on a legitimate business expense is a tax deduction you've just thrown away. The Impress system is designed to make sure that never, ever happens.
Let's make this totally concrete. Following this example, let's say your business is just $85 a month in these small, undocumented cash expenses. That adds up to over $1,000 a year. At a combined tax rate of 32%, that is a tangible tax benefit you are missing out on. And that's the bottom line. Over $300 back in the business's pocket. This isn't theoretical money. It's a direct financial return for tracking expenses you are already paying for anyway. You know, ultimately, this system is about way more than just petty cash. It's about taking control of all those small, hidden financial leaks in your business. It gives you visibility and power over your spending. So the final thought I'll leave you with is this. What other hidden costs are lurking in your operations, and how can a simple, structured system like this one help you bring them under control?